Strong evidence hit the U.S. job market, and that is slowing weight on Wall Street on Friday. Investors are concerned the Federal Reserve will now have to rush to prevent further weakness. The real concern is that the Fed will be forced to cut rates despite being uncomfortable with inflation concerns driven by President Trump's trade policies. Trump has been repeatedly calling on the central bank to lower rates since he took office earlier this year, but so far, the Fed has stood its ground despite the pressure from the White House. The sharp cooling reflected in the jobs data on Friday triggered fears about more pronounced labor market slowdown. Now, bets are for the Fed to cut rates as early as this month. Whether that will be a standard 0.25% or 0.5% is the debate now. The jobs data shows the Fed is behind the curve on preventing labor market weakening at a time when inflation continues to show signs of stickiness. The latest data from business sentiment to hiring shows renewed concerns around recession. Households fear jobs will be lost. The Fed Chair Jerome Powell has already signaled a shift towards jobs away from inflation. The latest data will add to policymakers looking for reasons to cut rates, but the dilemma will be rising inflation bets on Trump's tariffs and the squeeze on consumers. Some investors are questioning whether the Fed could cut by 0.5% in September. The number of economists penciling in that bet is increasing. The Fed's own beige book made for a grim reading earlier last week. Now, that was the catalyst for a 0.5% move last year to kick the Fed rate cut cycle. However, the conservative makeup of the Fed now and uncertainty over tariffs on inflation means there probably won't be a majority. Now, that dilemma was reflected in Wall Street's reaction on Friday, with two-year yields hitting the lowest level since 2022.
Financial markets participants are betting on an interest rate cut. And I think as we look out over the next several months, among the key questions will be, does the Federal Reserve deliver on the hope for a rate cut in September? And if it does, is it 25 basis points, 0.25%, or 0.5%? And then the other part of the question is, will there be other rate cuts to follow through the end of the year? It will all depend on the data. That includes the employment data as well as inflation data. We do have the consumer price index and the producer price index still due before that September 17th rate announcement.